Hey traders, a very warm welcome to you. So let's talk about Fibonacci. Now Fibonacci, for those of you who don't know, is basically a sequence of numbers that occurs quite frequently in nature. I believe it occurs in the kind of ratio of a snail's shell, in a sunflower, in the human body. But ultimately it's like a natural occurring sequence of numbers that we can use in trading to kind of guide us as to where potentially we want to get involved in the trade. Let me explain. Let's look at something like let's use GBP JPY example, so pound yen. Now the idea is, I'm going to talk about Fibonacci retracement in particular here. The idea is that you use a Fibonacci retracement on two clear levels, so a high and a low. You put your retracement tool at the low, you drag it up to the high, and then you see what you've got. So you can see here we have multiple numbers. Now you could have more on this, but it depends how you got it set up. Ultimately the main ones that you have are your 0 and your 1. In other words, the high and the low of the move. You've got 0.236, 0.382, 0.5, 0.618, 0.764. Those are the Fibonacci numbers. So this is why we used it. They're taken from nature, as I say, and we're using them to try and guide us for the charts. Okay, that's all very well and good, but how do we make any money out of it? What's the point in it? How is it going to improve our trading? So the 0.236 means that the price has pulled back 23.6% from the high. 0.382, 38.2% from the high. 50 means 50% from the high. So when we're using a Fibonacci retracement tool, we are basically saying to ourselves, okay, this is where the price has gone. These are the levels that we're expecting the price to stall at if it pulls back. On this example with pound JPY, you can see we pulled back here to the 236 level. It stalled a little bit, but then it rolled over again, stalled a little bit, but the real support came in at 0.5. So like a lot of these tools, you can't just blindly go in. I would always like to add another layer of decision making to the process. I don't think that just purely going in at each of these levels is going to be effective, but if you're combining it with, let's say, a moving average or an oversold or overbought stochastic or RSI, and then it happens to be oversold and at a Fibonacci level, then you're cooking, then you're looking at some serious stuff. So again, we see the 38.2 held, and actually you can even extrapolate it out. So the best thing with Fibonacci is that if you have a very, very clear defined high and low. I see some people putting on highs and lows, and they're sort of picking the right high or the height low. To me, it kind of defeats the object of it. It's got to be very clear like this, very clear low, very clear high, put it in, and then you can extend it out. And if you look again, you can see exactly what's happened. The 50% has held. It's kind of become support. As we pushed up, we pushed back above to the 100%. And if we scale out a little even bit more and see exactly what's happened for the rest of the time, and scale it right out, because we can do that because we have a clear high here, we have a clear low here, there's a clear drive level, so the Fibonacci does work. And look, that 38.20 level held again here. So the levels are useful. You can see how price does stall at these levels. We can bring up other charts, we can bring up stocks, we can bring up currencies, commodities, anything works better, as I say, with a distinct low and a distinct high, but it guides you. So strategy, let's talk strategy. The idea being, you've watched this drive up, you've seen it push up, and you want to get involved. So what do you want to do? You want to be looking for a buy at the first 0.236 level, 382 level, 50 level. You probably don't want to be getting involved any deeper than that. Potentially, that might be a filter you use, it might not be. But those are your levels where you say, okay, I'll have a buy, I'll have a stop, or I'll scale in, or whatever you want to do with the position. It's just a level where you can zoom in and focus your energy and say, okay, let me see. And for example, if we scale in a bit here, let me just zoom this in for you guys. If we looked at this particular level here, it pulled back. Okay, we saw a little tiny wick on the candle here, and we saw it was the 2360 level. We might take a buy. In this instance, it pushes up, there's a little bit of juice in it, a day or two of juice, and then it rolls over. So perhaps if you're looking for more than that, you're going to be stopped out. But the point is, it does have that little lift. And then again, you have at the 50% level, this was a little bit of a gap lower, so it's obviously going to be a stop on this, but your 50% level, and that worked almost perfectly. It was right on the button, and then you got that push up that you wanted. And of course, how you manage it is entirely up to you, and how you adjust the trade after that is a different decision making process for you to make. But the main thing is it guides you on those pullbacks, especially retracements, so you can look at those levels, you can get focused on it and say, hey, this has been a good move. Let me draw my fib retracement in. Let me now wait or set an alert for when we come up to these levels, and then I might look at another tool, another indicator, price action, whatever it may be, to decide whether I want to get long. Very quickly, you could even say something like, which is something I like to do when I'm buying a pullback, you can say, okay, when that trend line breaks, then I'll go long. In this example, you're not actually getting that much juice out of it, but there are going to be plenty of other examples where you do, and that continues on and on and on and on. And pushes to new highs. And then the final thing is you can add your extra additional level, which is taking it an extra 23.6% above the prior high, and that's where you can look for your final target. So in other words, if you are going long, either going long on a breakout, or you've bought a pullback, or whatever it may be, this will be one of your final targets, perhaps to scale, perhaps take it all off, however you see fit. So it's a way, all these kind of tools, guys, are ways of framing your trade. They're never going to be right 100% of the time, but it helps you, gives you a bit more guidance, because you can do so much stuff in trading, whatever you want, whenever you want. But if you just guide yourself a little bit more and say, hey, I'm going to get involved on pullbacks when we're at my fib levels, then at least you've got a little bit more of a framework to work around, and you can start to add other layers of edge in to develop a decent and profitable strategy.